Today we are talking about one of the more underrated YieldMax funds, ticker PYPY, the YieldMax PayPal Option Income Strategy ETF. That is a mouthful. And so this one it's yielding over 100%. The distribution rate is over 100%. I believe it is currently the highest distribution rate of a YieldMax fund, and higher than I've seen on the market even. So if you guys like these videos, ETFs, if you like dividends, making money, don't forget to like the video and subscribe. That helps me out a bunch, and then you get to see more content. And as always, hope you guys enjoy. Let's jump right into the data. 102.27% is the distribution rate for this fund, PYPY. Now, this is because the last yield was insanely high at $1.62 a share, which is insane. Like, that is a huge distribution. I wish I was holding this before, but I'm not. So, bummer for me and bummer for anyone else not holding it during that time, but that is actually insane. So, we've seen this page before. We know what YieldMax funds are and how they work, but the fund overview, PYPY is an actively managed fund that seeks to generate monthly income by selling and writing call options on PayPal. It pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of PayPal, which this is really, really important. These YieldMax funds, it's really important what the underlying stock is. You don't just want to go out and buy anything, but we'll get into that. We're going to look at the price of PayPal and see how it has been trending. The investment objective of the fund is to seek current income, and the secondary investment is to seek exposure to the share price of the common stock PayPal. So this one's really, really interesting. Net assets, 25 million. Someone pointed out that this was initially, I'm not sure if this is current, same thing with like the assets under management, but still a higher gross expense ratio of 0.99 that we've seen, you know, for a while on the YieldMax funds. They're really, really expensive to own. And so that is definitely a downside. But what we'll do now, let's look at the price difference between PYPY and PayPal and see how things are going. Looking at the price action of PYPY, we can see it's down 15% over the last year. But a big portion of that is because they paid their dividend out, which is why this drop happened. It went down about $2. So in reality, I mean, if I had made this video a few hours ago, maybe even a day ago, you'd only be down about 5, maybe 5.5%. So that is a big drop, but we're used to those drops. Everything dropped today. CONY, tsly dropped. The whole market dropped pretty wildly, but I still think this is a definite good option when you're looking at the YieldMax funds. So now let's look at the price of PayPal and compare the two. Like I said, these YieldMax funds are only as good as the underlying stock or security that they hold. And I truly mean that, because if you're really looking for a solid dividend based off of a stock that doesn't even pay one, you need to know the price action of the security. So we can see it is down 4.36% today, a bit of a drop. Like I said, the entire market dropped. But one thing that I think is super, super interesting is PayPal it's running up about 18.5% on the 6-month, 9.7% on the year, but on the 5-year, it's still down 37%. So this thing was over $300 in 2021 and has since fallen like mad. Now, we do see this continue to bounce around, so I wouldn't necessarily be buying it at this price, but it is definitely a beaten down stock, and there are some key reasons why I like this one. Firstly, look how it's been trading sideways. It's been trading from the 70s and back up to the 70s range for a long time. It's got a decent amount of volatility and a good amount of volume. And so I don't think that PayPal is going to run back up to 300, because if I did, I wouldn't buy the YieldMax fund for it. I would just buy PayPal. And that's what a lot of people don't understand about the YieldMax funds. You have to find the right underlying stock. Now, what I'm looking for with PayPal is trading as it has. I want a decent amount of volatility, nothing too crazy, because you want better premiums. But at the same time, I don't want this thing to run 50% in a year, because if that were to happen, yes, you'd still get a good amount of money from the distributions, but I'd rather own the underlying stock and get 50% rather than the capped version of YieldMax, which can maybe get 25, 30%. And that's just a spitball. I'm not sure what the actual percentage would be, but they are capping how much you get on price appreciation because they have to with how they write the calls for this. So it really does make a lot of sense for me for PayPal to be a good underlying stock for a YieldMax account. Now, another insane reason. Let's read this article. 72% of PayPal is institutional ownership, meaning big institutions believe in this fund. Now, when I look at what institutions are buying, they're buying deep value. And that's why they're not looking for something that's going to pop and then sell off. They're not looking for swing trades. They are looking for value. And they see that obviously PayPal is undervalued, which in my opinion means over time it will go up. And if not, you're still getting the money from the dividend. So if you're owning PayPal and it drops, that's a bummer. But if you're owning the YieldMax PYPY and it drops, you're still okay. So check this out. So ownership, general public is 27%, 27.5%, institutions 72%, which is insane. So obviously someone believes in this fund, and 41% of the business is held by 25% of the shareholders. The downside to this, if anything happens that makes one of these significant holders sell, you might see a crazy drop in the price, which would reflect, also it would increase volatility, but it would reflect in the YieldMax. So I don't always dive this far into the underlying stock, but I think with PayPal, it's really, really important to look at this fund and then for PYPY to understand PayPal. The last distribution has been insane. Insane, $1.62. The prior high was 94 cents, and now we're all the way up to $1.62. So this is definitely going to skew some of the information. We're used to the YieldMax funds being all over the place with their distributions. We've seen it with all of them, really. None of them are very consistent, but consistency isn't always important if they're yielding high anyways. So what we'll do, let's run the numbers here. We are going to take the number of distributions. Well, actually, we'll divide 7.57 by 11, which is our number of distributions, and that gives us 68 cents. We'll multiply that by 12 for a full year, and you get $8.25. We're going to divide that by 16.98, and that's going to give us a number that will then multiply by 100 for our percentage, which is, oh, I messed that up somehow, but 48.6%. 48.6% is our number. And now that is lower than we've seen on the website, and that is because this last yield was super high. The last distribution rate was so high because the distribution was so huge. So it does affect that. So they're just listing it off of the last distribution. Someone in the comments pointed that out last time, and I really appreciate you guys for doing that. But still, this yield is pretty phenomenal, and that last distribution kicks up the yield by what? Almost 20%. So a little under 20. So that's still phenomenal in my opinion. Now let's look at the drip calculator for some really surprising results. I hope you guys are ready for this. We have PYPY, and I always compare it to the underlying fund. So we have PYPL. So this is the first instance where I've seen it outperform the underlying fund, which is insane. And that's why I think this one is so slept on, because PYPY, with dividends reinvested, total return has been 31%. PayPal is up big, 22.23%, but still, PYPY outdid it by 9%, which is phenomenal. With dividends not reinvested, PYPY still outperforms just barely over PayPal. I don't know if there's another fund you guys can find or know of where the underlying stock outperformed for these YieldMax funds, but this is a huge game changer for me. So what we're going to do now, we're going to plug this in and calculate what distributions you would get from having 10K invested in this fund with their listed distribution rate. I'm going to do this twice. We're going to do it first with the insane numbers, which is actually going to show us how realistic this would be if the return rate remained how it has been. Now, that being said, this has been a record month for the fund, so it's unlikely the return rate will remain at 102%. But we can kind of estimate easily with this. With 10K invested, your first distributions for the full year would be $10,000 and, well, $10,277. So with the power of compounding, like when we start really bumping this up, we go to 5 years, that number is going to jump like mad because you're doubling your money every year, more than that even. So at year 5, you are now making $171,000 from your 10K. And that's just in the distributions. Your total return is over $238,000. And this is why it's unrealistic for this to happen, because for it to really, really work like this, the return rate would have to stay the same, the distributions would have to stay in the 160s, and the NAV would have to remain constant while the price action is not dropping. Now, we have seen it, this one has held up better price action-wise than a lot of the other YieldMax funds. So I see it being a better potential than some of the other ones, but still, it's extremely, extremely unlikely. When we start jumping it up to 10 years, it's going to get insane because all of these high yielding ones, they're just wild. So at 10 years, we're already into the millions, $5.8 million. $5.8 million from $10,000 invested is crazy. And your total return is $11 million. 11 million is insane. So I'm going to keep going. We're going to jump straight to 20. We'll do 20. Gosh, after 20 years, you're at what, 6.6 billion? The numbers are so small. $6.6 billion returning to you every single year in distributions. And your total is $13 billion. Now, I always like to say this. Let's say you're 25 right now. You're going to retire at 65. So you invest 10K into this fund. It trades sideways. It continues. The return rate is consistent, and boom. What you're left with is after 30 years, which is a super long time, and 10K is a good amount of money. What you're left with is a number, oh my gosh, $7.6 trillion paid out to you every single year. Every year. Every year. That is insane. And your total return, oh God, $15 trillion. Guy, it's just insane. So what we're going to do now, let's get this back to zero. And we're going to go with our calculation. 48.6%, a much more doable return rate. And this is what we've actually seen it pay out. So that is really, really important. We have seen a drop in price appreciation recently, but after 1 year, your $10,000 has gotten you $4,800 in dividends, and your total return is, of course, $4,800. So we'll kick this up and go to 5 years. 5 years, it's much more realistic, but still insane. It's still insane, even comparing it to the 100% rate. After 10K invested for 5 years, you are now getting $23.7 thousand every single year. $23,700 is wild, and your total return is $62,000. 10 years, it just gets crazier and crazier. You're now getting $171,000 off your initial $10,000 investment. And your total return is $515,000. You could buy a nice house. Even in California, you can find one. Maybe. 20 years. My goodness. You are now getting, oh my gosh, my brain can't even do the math, $9 million. $9 million? Yeah, you're getting $9 million, just over $9 million every single year from the distributions. And your total return, $27.5 million. Now again, you're 25, you invest 10K, the fund trades sideways, the return rate remains consistent. After 30 years, holy smokes, you are now getting $473 million every single year. Which I don't even understand. It is crazy. And your total returns, you can't forget those. Was that 1.4 trillion? And it's only going to go up from there if you keep the money in. So that's the power of these funds. And I do think that this is extremely unlikely. Like I said, it's not financial advice, but it is, the potential with some of these funds is crazy. And I think PayPal, PYPY, is super, super slept on. Let me know what you guys think. How does this one compare to, let's MSTY or the NVIDIA one, NVDY? Let me know in the comments. And don't forget to like and subscribe so you don't miss another update. Thank you guys for watching.